for other democracies trying to limit Russia's influence in various sectors of the world and trying to send a signal to countries such as China that, hey, if you try to
All right, I
invade
just thought I would
our
start a few minutes
democracy,
early so I can do a shameless plug. Gotta you gotta do the commercials, you know. The Next Level Library is going to be getting a lot new videos. So I'd been doing no, I've been rebuilding the Next Level Library and had been hoarding all of those videos because I was expecting that we would be opening our new Discord soon. Well, I kind of gave up on that. It doesn't seem like we're going to get the new Discord opened, anytime soon. And I really want to get this content out. So we're going to be putting the new content into the Next Level Library. Um, a lot more futures material than we've had before. I've always felt like that was an area that had not been really kind of flushed out enough. There's a lot of content that I believe that needs to be in the Next Level Library and the future side, and I've been working on doing that. So if you are watching this on YouTube and you're not a Bullish Bears member yet, maybe consider coming over, getting a trial, hop into the Discord and give us a shout, ask questions. My name is Signet. You can always reach out and ask for me. If you are new to the Bullish Bears, you haven't really taken the opportunity to come over and look at our content, our material. We've spent years developing content focused on helping you transition from a new trader who doesn't really maybe know where you want to go or what kind of trading you want to do, getting you from that point in life to a point where you can trade just about any product you want. You understand the choices that are out there. And that way we can be completely product indifferent, right? I trade futures, I trade stock options, just about everything out there. And, just something as simple as the S&P can trade that with the SPX, the SPY, the ES, the MES. There's so many different ways to approach it. And depending on the account size you have, or, maybe you have a day job or just want to trade at night, all these different products out there can help you get to what you're trying to accomplish. Just takes a little bit of maybe some rails on the side of the road, right? Kind of keep you on track. So be watching for an update in the next level content. We're really going to be spreading that out between now and March, I believe. We're going to just bring them in a little at a time. So just about, I think that's about all the commercial I need at this point. So from there, the first thing we do every morning is we want to look at the economic calendar. You want to check more than one. The one on Thinkorswim is great, but it doesn't always get everything. So we start at FX Street. It's a free website. There's no reason to sign in. And you can see it gives you a little bit of a excerpt on what's going on in the dollar. It's a really big deal to understand when the dollar is moving, what is moving that dollar. Sometimes it's really bullish, and then other times it's not. So unless you've got an economics degree and you understand the economic global forces that can move the US dollar, getting a little bit of help can go a long way, right? I certainly don't have an economics degree. So I found this to be a useful perspective. The color scale here kind of gives us an impact idea of the economic events on the table. And you can see we've got a fairly decent day. It is really important to understand, guys, that this week is a critical week for the rest of the quarter and maybe for the rest of the year. It really is that impactful this week. This week is that important for a number of reasons. So 8:30, 9:45, 10:30, 11:30, and 1 o'clock. Do not sleep on these additional auctions timeframes. They are absolutely critical to the market. The other day when we had that early morning run and we rallied into the regular trading hours and we ran all the way up into 11 o'clock on the dot. Then we had an additional auction, flipped over and dumped for the rest of the day. And we've seen the NASDAQ move almost 700 points in a single day. And where did it start? Right at 11 o'clock with an additional auction. I mention it all the time. Those additional auctions can completely reshape our trading day, take us from a trend in one direction to a trend in another, or take us from a range bound market where we have no trend and give us trend suddenly. From that, we can jump over to something like 5 things you need to know. It's another free thing that you can get. Just go over to Bloomberg, sign up for it. They'll send you an email. They're talking about the war risk that spiked our market about 2 hours ago. Uh, a warning had come out pulling diplomats from the country. Some growth outlook on the global side, Bitcoin talk, and then it gets into the economics again for the week. We do have Blinken speaking this week, and the foreign ministers got Halliburton reporting. So it's going to be a pretty busy week. Uh, yeah, that about got everything we need on there for now. All right, so we bring it over to Thinkorswim. On Thinkorswim, at the top of your menu selection, you've got Market Watch. Click Market Watch, go to Calendar. If your calendar is not nice and neat and clean like this, maybe you've got a bunch of junk all over the place. You want to clean it up, hit the show wall, turn everything off, and then just turn on the Econo Day event. I like to grab the event description and drag it over to where it's next to the time frame. That way I can see the time and what the thing is right next to each other. We're not seeing any additional things on here that we didn't see on FX Street, but it didn't hurt to check, right? And the descriptions that it gives here are really they're really insightful, they're really educational. The problem is if you click away, so does the box. It goes away. These boxes are pre-written material that comes from the econoday.com website. It's where Thinkorswim reaches out and gets that material. They don't write it. It comes from them. So if you wanted to dig deeper into these events, maybe get a little basement economist education, try going over to the Econo Day website. It is a paid place, but there's plenty of material over there that's free. You don't have to sign up for it. So it's econoday.com. Just jump over there, take a look. 8:30, 9:45, 11:30, and 1 o'clock. The 11:30 and 1 o'clock are the additional auctions. They are foundational to our trading day, so be aware of those. All right, so we're looking at the S&P. Got our pivots marked out. The weekly expected move top. We're underneath where we closed on Friday. Globex high, Globex low. These green and red percentages are based on where we closed, right? Now, Thinkorswim, it gets a little tricky on the weekends. Its coding doesn't always match what we're looking at, but we're basically asking a question is, are we down 1%? Are we down 0.5%, 1%? And if we were to, use percentages for our target, what is a good clean bullish day or a good clean bearish day? In the indexes, that's about 1%. So we can target that 1% move. With the ADR right now being 1.6, we can easily make a 1.5% move, which would put us at around a 44.51, or a 1% move to the downside, even a 1.5, which would put us down to around 43.20. We are underneath all levels. And if you run the JP Morgan or the Morgan Stanley, I can't remember which one of it is, that uses the 7% model, if we are down 7%, it is considered to be a pullback. If we're down 14%, then it's considered a correction. And if we're down 21%, then it's considered bear territory. Those percentages are not written in stone. And depending on where you're going, say Investors Business Daily or Investopedia, stockcharts.com, they're all going to list a different negative before they start talking about bear markets and pullbacks. I've seen 10%, 20%. You just want to pick one and kind of stick with it. What we can say is that the S&P is down 9.3% off of the last high that it had set. We have a critical level around the 4,300 area, and we have a really wide volatility box this week. The volatility box, of course, being the weekly expected move based on the implied volatility figures on the options chain. Now, you don't have to trade options to be able to use something like that. And even just at a glance, if we measured this week's and compared it to last week's expected move, you can see that we have an expectation of a lot more volatility than we did last week. It is worth noting last week only had 4 days, and this one has 5 days. But still, using that analysis, if we went back a week before, this was the week before the holiday, a 5-day week. This was a 4-day week. And then we're back into a 5-day week. There's a lot of volatility in there, guys. I took a picture and posted it in the chat looking at product depth. This is the VIX futures, and we are in full-on backwardation mode. You can see that the February series are running above 27.5, and if you work through the months, you get to June and you're around 27. Beautiful textbook example of backwardation. So if you're an options trader, pay particular attention to the skew within the options chain. You can see that we're well outside of the box being way up here. In green, we've got volume by price, and in blue, we got volume by time, TPO, and volume profile. So you can see the point of control is well over our head on both of those. The boxes are well over our head on both of those. The general question that we want to ask is, are we continuing to move farther away, or are we moving back towards the box? And right now we are continuing to move farther away. Now that's a 30-minute profile. It never hurts to bring up the 1 hour when you're already looking at these things. Ask the same kind of question. Where is the boxes? Value area low, value area high, point of control. Are there any volume nodes that would be of concern? And there you can see that there's a huge chunk of it around 44.50. That is now overhead resistance. So when you're marking out pivots and levels, you're trying to validate support and resistance. It's important to recognize what kind of resistance you think it is, not just drawing a line at a candle that has a pivot, recognizing that it's old volume or that it's new order flow or something more than just, well, it turned there and went the other direction, so I'm going to draw a line and call it resistance. That'd get you a little ways. This is a very critical week. As I mentioned at the start of all of this, one of the reasons that it's very, very critical is because of Apple and Microsoft. They're both reporting this week. Tech dominance has been what has been crushing this market. And if they fail, then we're going to really see a negative market this week, right? It's critical that their earnings are not only positive, but positive enough. As we saw the other day with Netflix, just having good earnings isn't enough, right? They got to hit these internal benchmarks. And if they don't do that, it's going to get pretty nasty out there. On the other hand, we also have the Fed this week. A lot of this sell off has been because they are pricing in an aggressive Fed move. Nobody at the Fed has given a signal that they're going to get aggressive. It's important to understand that. The market thinks the Fed is going to get aggressive and has begun pricing in that aggressive action from the Fed. There are some economists out there who believe that the Fed will not get aggressive and that this inflation is mostly due to bottlenecks, and that as we continue getting the bottlenecks dealt with and the Omicron burns itself out, that things will begin to stabilize all around. We are in a sell the rip, not a buy the dip situation. Having said that, since this week is a critical level and we're going to start to see the firms go to the sidelines, you may want to keep your trades very short duration until after Wednesday afternoon. I wouldn't look to get into any longer term swing trades because depending on what happens with Microsoft and Apple and then the Fed this week, we could absolutely reverse off of these lows and come screaming right back up again. So, no amount of technical analysis in the world can give you that heads up, right? We can look at the chart all we want. We can study these candles all we want. But at the end of the day, it's really going to come down to Microsoft, Apple, and the Fed. So keep your trades short duration until then. And when it comes to reversals, there are plenty of examples throughout history where we just spun on a dime and began running the other direction. Right? This does not have to perform a basing or any other kind of stabilizing price pattern. It can literally just flip over and start running the other way. Should it get nasty? It's going to get real nasty. And if Apple and Microsoft stabilize the market, if the Fed can um, squash these fears out there that the Fed is going to get aggressive, then this could easily begin to turn around. I'm not saying that it's an either or, not yet, but it is important to realize that we're almost in a situation like that. It's either going to dump really, really bad or it's going to rally right back up. A lot of it has to do with the balance sheet. So I got that post in the after hours. There's another one here in the large caps where I go through and talk about what was going on this morning, the rate hike, the balance sheet reduction, pricing in. You can see that they've already priced in 4 rate hikes. Well, they've been pricing in quarter point rate hikes. And now there's a discussion that it may not be quarter point, it may be half point rate hikes. So, if they hear from the Fed that it's not going to be quarters and that it's going to be higher than that, they're going to start pricing that in. So, in the next 2 days, up until Wednesday afternoon, it's likely going to be a pretty choppy market without a lot of guidance one way or the other. It doesn't mean that we won't move. The intraday candles are massive. We have an expectation to see a lot of movement. The 4250 area is kind of a line in the sand, more based on how far away it is than just the fact that it's some pivot point. That gets us at around 13 to 14%, right around that level. It's that reversal zone that we were talking about. Turn on your major moving averages out at those levels, by the way, because the 200 is over our head now. And if we're going to get a rally to the upside, we're going to have to deal with it. For today's trading, you do have the Globex open. That's one of your pivot points. You have the close from last week. It's another pivot point, the Globex high and the current low. All right, for the NASDAQ, we already broke the H pattern, so there isn't one. Double bottom with a lower low is what IBD considers a good double bottom. This very easily could come ripping right back up again. I'm not suggesting we're going to get an upside move. I'm just saying don't discount the idea. You can see we are underneath the 200. It's far enough away that I don't expect it to be something that we interact with today. The weekly expected move is significant. We're not at the bottom of it. We're not at the top of it. We did break some critical levels back here. We're going to now need to work through those critical levels to get back up. 13,750 is kind of a line in the sand. Notice the measurement distance from the highest point to our current location. More than 14.5%. According to the Morgan Stanley style of what a pullback and a correction is, this is a market in correction. Depending on what the Fed and Apple and Microsoft do this week, we could easily see this recoup half of this move by the end of the week or continue this move to the downside. Remember that weekly expected move is only one standard deviation. Okay, so keep that in mind. That's only one standard deviation. If you were to take something like the probability analysis and set it to a two standard deviation, you can go in and check your percentages on how likely it is that we can make a move to the upside or the downside within the time frame that you want to measure. Due to the volatility, this window is really, really wide. We do have institutional pivot points to deal with: the Globex open, the Globex high, and our own intraday low or Globex low. You can't have one of our trend days, and those of you who are in my coaching, you understand what I'm talking about. One of our trend days, you cannot have one if we are inside of yesterday's price action. Now, that doesn't mean that you can't have a trend day. It just won't be one of those 4 trend days that we focus on. If you find that trading has been difficult, wait in your intraday trading until you are outside of the Globex range. You'll find it less choppy. I'm not saying that you shouldn't trade if we're inside the Globex range. I am saying if you are losing more than you win and you find trading difficult, quit doing the hard stuff. Makes sense? A couple of moves that we've seen this morning, some of it was based on the news out of Russia. So, yes, some of the move was from that. But look at what's going on in the dollar this morning, on in the bonds this morning. Keep your eye on those two. The VIX has been performing really well, giving us some perspective of confirmation in the moves. So continue to use that. We are heavily synced in the market right now. So it may be worth your time to go over to the Thinkorswim Discord that I built and get the full market alert. It's this hidden label that will just stay hidden all the time unless all 4 markets correlate, right? And I mean, fully 100% all market breadth from all 4 markets correlate all at once. If it doesn't do that, then this label will just stay hidden. It won't bother you. But you really want to know when all 4 markets all at once, tick, trend, AD, UVol, DVol, all of it on all of the major indexes go somewhere at the same time, to the upside, to the downside. That's what this thing does. Correlated market alert. So you can get that over in the Thinkorswim Discord, which we're slowly getting cleaned up. I spent, maybe a half my weekend working on this thing over the weekend. I didn't even get a dent in it. There is so much material over here, but we did make it through the market internals and the price indicators and trend. So I got that far. But as you can see, there's a lot left to go, right? And when I say that we've been working on it, notice that it's nice and clean. There is a picture that goes with a description so that you understand what the indicator is, what it looks like, why there's different versions maybe of what seems to be the same thing. and in some cases, blog posts or other external information that you can go to find out more about it. The link to get to this Discord is in the Bullish Bears Discord. Come down to Traders Resource Zone, go to Custom Scripts, just kind of scroll back a little bit, the Thinkorswim workbook, and the Twitter package, which is our alert system for news and things like that. Just taking a look around, checking the news before we go any further. Nothing's really standing out since before I started the stream. So you can see the sectors mostly in the red. If they're not down at least a 0.5%, then I don't really give it much weight. Bitcoin's down the most. Emerging markets are down over 1%. Some of the precious metals are down more than a half. Interesting that gold is up, but silver's down. Utilities up slightly. But all in all, a lot of these sectors are just going to kind of go stagnant, probably more closer to Tuesday afternoon than this early on Monday. But so much is dependent on the Fed that it's kind of hard to imagine that an institution would go in moving around millions of dollars just for a day and then have to start unwinding that Wednesday afternoon, not quite knowing what the Fed is going to do. The EV market, completely negative. So we use these as alternative sectors since the S&P 11 sectors are kind of antiquated, old school, and don't get real nuanced like going to an EV market or the chips or the pot stocks. So we can see the chips are down, the EV markets are down, uh, crypto's down. We saw that utilities was up, so we can go take a peek there. On days like this, when we really can't lean on the sectors, this is when I say that we got to go in and apply our own scanners and actually do our own stock picking rather than leaning on the sectors. Now, last week during the live stream, I showed how you can go over to the OCC or the OIC and you can get the most traded options volume list, right? So you go over there, you get the December list, you look at the top 100 names in options volume, and you use that for your watch list. And so we did that. We built that watch list. So this, what that gives you is that instead of this list down here that we're looking at with 600 names in it, I can't apply this to much on Thinkorswim because Thinkorswim will error out if I give it 600 names in a watch list. But when it's the top 100 most liquid names that were traded last month, then it's only 100 names. We can apply that on Thinkorswim more effectively, especially using the watch list columns and such. You can see there are a lot of names that are up this morning. Plenty of things out there to trade. Lots of opportunities. So just because the sectors are down and the indexes are negative doesn't mean we don't have anything to trade. There are a lot of opportunities out there. I want to focus on those. When you're going through this list, start asking the questions about not just a name, but what does that name represent? What sector, what industry, what sub-industry, who's its peer group? Got quite a bit of retail showing up in there. It may be a good way to go. Also, there's been a lot of opportunities in the last few days for the red to green setup. So that's worth kind of focusing on as well. A red to green setup comes off of the daily time frame, but it's an intraday trade opportunity that is absolutely perfect. One of the criteria is that we find a market that has rallied up in the pre-market and is going to open near or equal to where we opened the day before, right? Is a red day yesterday, a green day today. It's I like to find the ones where they close in the lower portion of the day and then we open up near the previous open. In this example right here on my chart that we're looking at, we closed more in the middle of that candle. So it's not a perfect example, but it'll do for the discussion, right? So we closed there and we opened there. Well, in the pre-market, this had made that rally up. So you can begin looking around in the pre-market, finding things that have made this move in the pre-market that are looking to open near the previous day's open. You can use the pivot points from yesterday, like the previous day's high, for an inside day breakout or an IX10 pattern connected with a green to red, and pair your setups, your strategies from your playbook so that it narrows down your watch list. Really get you to focus on 2 or 3 top anticipated market movers rather than having a list of 10 or 20 and not being able to catch any of them. There's a lot of red and green setups right now. So that would be one of the things that I would focus on. That and any IX10 or inside day patterns, 2 or 3 in a row, preferably at the bottom of a pivot, not at the top of the pivot. So I got for you guys. Be careful, be safe. I will see you all tomorrow. And for those in the futures, well, I'll see you in the futures.